Welcome back, America. It's great to be here. This is Anthony from Elevate with Anthony and Steve. Joining me today, as usual, my should you brother, Steve Mattioli. Are you out there?
Good morning.
Good.
I'm here, Anth.
Good morning.
Great to be here again.
It is great to be here, Steve. This is a
Yeah, it's been a little while.
Yeah.
We kind of dropped the ball a little bit.
We're
not going to do that again.
I miss getting together like this.
Yeah.
Well, you know what? We are going to start another new podcast series today, and I'm so excited to bring this to our viewers.
Excuse me.
That's okay. It's called our Should You series. And today we're going to start talking about anything that involves should you. And it could mean, should you buy a car? Should you make a home improvement? Should you pick up a fantasy football player? It's going to go from finances to car repair to home improvements to a lot of topics. And Steve, I know you always have a lot to say.
Yeah, I think this is a really fun series, but it's going to be a really educational one too, Anthony, in a lot of different areas. Should you do this? How many times have you asked yourself, should I do this? Should I take out this loan? Should I move this money? Should I buy this? Should I finance this? Or, whatever the question is, should I do this? And these are questions that Anthony and I have asked ourselves many times. Should I do this? And we thought it'd be great to do a series on some of the things that we have a little information on that we think we could help the audience with. So I think you're going to find this enlightening, and we're going to talk about some big things and some little things, but they're all going to hopefully help you make better decisions. Should I do this? And ultimately, the decision's up to you. We're going to present the pros and cons, and we're going to talk about our experience in that particular subject. But it's going to help you make a more informed decision. So I think it's going to be enlightening and fun at the same time, and help you make better decisions in some areas.
And that's the key. We're not going to tell you so much what you should do, but we're going to give you a lot of information, right? So you can make an informed decision about what's best for your particular situation. And we're going to hit on so many things in this series, Steve. I know we're going to connect with everybody. This is a series.
I think so. I think so.
That's what I like about it. And today, Steve, tell them what our topic is. Tell them what we're going to focus on.
So my brother was in the banking industry. He was in the mortgage loan industry for many years. So we thought we're going to start with a very small topic called, should you use your 401k to help finance your next home? That's a small topic, right, Ant? There's not much at stake there.
No, there's not much at stake except if it depends on...
Except everything.
Except everything. And we're going to talk about that. If you're going to go all in, guess what? We just want you to know, hey, what some of those ramifications are, and you still may want to go that route, but at least you're going to know what to expect, and then again, do what you have to do accordingly.
Right, and actually, this came from real life experience with myself and some friends I know, and Anthony had the same thing with some of his friends. So this is not like a out of the world type question. People do ask this question: should I do this? Should I get some of my 401k money and use it to purchase a home? So we thought it'd be a great place to start. And with Anthony's background in this subject area, I think it's going to be very enlightening. So hopefully we're going to help you if you're thinking about that, or if you may be thinking about it. We're going to give you some things to consider before you make that decision.
And Steve?
And Anthony, we want to say this too. We are not financial advisors. I'm not one. My brother's not one, although we could be. But we're not. So you need to take the information we give you and get with a financial advisor. We're just giving you the pros and cons as we see it, as we've experienced it, people we know that have been through it. But obviously, we're not here to give you financial advice. You make the decision. Anthony, you want to add to that?
Steve, very well said. Very well said. You beat me to the punch there. This is information that you can take, and consider. And then again, make an informed decision. But I always find that when I have all the information that I need to make an informed decision based on my own personal financial situation, That tends to
Right.
work best for me. Nobody likes surprises. And sometimes the financial industry won't go over all your options. And that's what we're here today, just to let you know ahead of time when you do decide to buy a house, if this is one of the considerations, some things you can consider.
Exactly. So, so with that, we're going to get into this topic and the considerations you ought to think about. And again, my brother was in this area in mortgage lending. Anthony, you could talk about it a little bit for many years. So he's familiar with how people have to get money together to buy a house on a down payment and the struggles they face and the challenges they face and like what should I do? I need this much money. I don't have it. Should I borrow from this account? Should I get from this account? And so today we wanted to hit specifically on should you take this money out of your 401k? Is that a good idea? And what are some of the ramifications you need to consider on it?
Steve, let's get this Should You series underway.
Great.
Okay? So,
All right.
question is, what is the biggest obstacle to purchasing a home? It's your
Having cash.
having cash.
Right?
Cash is still
Yeah, they
king.
want to the minute you call a lender, the first thing they want to know is how much cash, how much income do you have,
Right.
and how much cash do you have to put down? Am I right,
Right.
Ian? Is that one of the first questions you
Steve,
ask?
they're trying to figure out if you're a pretender or a contender. Okay? That's what it's all about. They're
Okay.
getting calls all day long. They don't have time
Right.
to spend a lot of their time with somebody, and it never goes anywhere because they don't have a down payment. And there may be some programs out there with zero down. You may not qualify for them. It may be based on your income or where you're buying the house or what you do for a living. So most of the time, you need to have some kind of down payment. And for some people, the 401k always comes up as far as, hey, that's another option. So that allows you to get in the home today. And that's why you would consider taking money out of your 401k. And a lot of times, the down payment, Steve, can actually get you better terms. So if you put a little more money down, you're going to get a better interest rate, where over 30 years can save you a lot of money. And that's another reason why the 401k comes into play. But as we're going to see later in this podcast series, that's the good news that, hey, I can buy a house now. I've got the bigger down payment. It's going to come from my 401k. But we're also going to tell you the other side of it and what are some of the ramifications of that.
Right. And this is tempting, Anth, because
Oh,
when you're trying to buy a house and you want that dream house and it's in that price point and you're looking for that down payment money, that 401k is just sitting there talking to you like, hey, I'm 50,000 sitting right here. I can help you. Just grab it and go, right? And Anth, talk about how the mortgage lenders are always going to encourage you to find that money because they want the loan, right? If it's sitting there, it's going to be very tempting to take, and they don't care whether you really take it, where you take it from. They don't care what your financial decision is 30 years from now. If it works for them, they're going to go with it.
they're looking.
Am I right?
They're looking to getting you in a home, Steve. I mean, sometimes we're counting change in the couch pillow. So
Right.
there's a lot of ways to come up with the money, and taking a 401k distribution is definitely one of them. And it can help you buy a house, and it can get you better terms. But then again, let's talk about some of the cons maybe. So the pros would be helps you get into a house, helps you get better terms. And a lot of times it's your only chance to buy a house if you haven't had enough time to save money up or haven't been able to save money. So what are some things to consider when you're using your 401k? Do you want to talk about that, Steve?
Yeah. So one of the first things is one of the cons is you're gonna lose the tax deferred growth
Definitely.
from the money that you're borrowing from or that you're taking out. So if you're taking out $50,000 from your 401k, and I know a lot of people say, well, I'm just moving the money from there to my house, and my house is going to appreciate, And so, it's the same thing, but you're losing that deferred growth in that
which over
401k
15, 20, 25, 30 years, it's tax
is going to add up to a lot of
it's
money.
tax deferred
Right.
growth, right? That money was in a 401k where you weren't paid taxes on it, but it continues to grow.
Right.
So that is huge for
So
a lot of people.
so you can't just look at it, well, I'm just taking 50,000
No.
out. You're actually taking more than that out over 10, 20 years. The deferred growth you're losing from that 50,000 could be 70,000, 80,000. It's costing you more than just what you're taking out because you're losing that deferred growth. And that's the benefit of a 401k. You're not paying taxes on that money, that growth over many years, which helps you accumulate a good nest egg for when you get near
Correct.
retirement.
And you use the amount of 50,000. That's just an amount that we're giving an example, because I've seen people take out.
Just to make it an
Right.
easy example.
I've seen
right.
people take out
Right.
5, 10,000 because they had to. And again, the less you take out, if you're going to do it, we're going to talk about that too. The less you take out, the better off you're going to be. Now, another reason why you may not want to do it, because if you're under 59 and a half, you're going to pay a 10% penalty on the money you take out, and that'll be on your next tax bill. So you have a 10% penalty, and on top of that, the amount you take on gets added to your taxable income for the following year. So it's a double whammy, Steve. If you're under 59 and a half, you're taking the 10% penalty up front on the amount you took. That's part of your tax bill, and the taxable income is added on to your W-2 income for that year. So if you made 100,000 and you took out 5,000, now you owe tax on 105,000. And depending on how much of the 401k loan you take, that can be a pretty sizable amount. And some of the people that we talked with, and that's why we're doing this podcast, they were actually surprised at what that tax bill was, because nobody made that clear to them. So that's what this is about, Steve. Should you? And again,
right. Should you do this?
Right.
Exactly.
We're not saying.
So we went over some of the reasons why you'd want to, and then now we're giving you the other side of the story, because we have talked to people that have done this, and then like, oh my gosh, we got hit with a $10,000 tax bill that we weren't thinking about. So now you think of the money you took out, you think of the deferred growth you lost, you think of the taxes you just paid, and then you think of the 10% penalty. Suddenly, it doesn't look like that great of a deal, right?
Again,
but it's something you need to consider.
Especially
something you need to
depending
consider.
on how much you take out. Depending on the more you take out, the bigger the tax bill. So, hey, Steve, we talked about and I'm going to pause here for a minute. We talked about a couple of things you should do. Tell us about something else you should do when you're looking at buying maybe some eye apparel, or sunglasses or shades. What are some of the things you should do?
What we can confidently say what you should do is go to sierrabub.com and get your next pair of sunglasses, our Odyssey line or our Zephyr line. Our Odyssey line of sunglasses are one of the lightest sunglasses that I own. They're only like 23 grams. They're amazingly light, very durable, stylish. We got 3 colors, and they're, for what you get for the price, it's a great value. So we can definitely tell you to go to sierrabub.com, help support this podcast, help support our show. Get yourself a pair of sunglasses that you have in each vehicle, so you're never without eye protection. Put them in each car. If you go fishing, take one aside for fishing or hiking. You're going to thank us once you get these and put them on.
Hey, they're a great accessory, and they look good, and you're going to like them. So, hey, help us out and support our podcast. We would definitely appreciate that. Steve, so we talked about things maybe that when you take a 401 distribution, some of the cons. Now, what are some of the alternatives? And I'm going to take the first one. First one, you can do a 401k loan. If you take it out a loan, you're actually borrowing your own money. And again, you want to check with your human resources area to see how much you can take out. But you're paying yourself back. And this way you avoid the tax situation with the 10% penalty and then the taxable income being added on to your income. And also, it's your money. You're borrowing from yourself to purchase a home. That's always another alternative to actually taking out the distribution. And one, you should get the information and something to consider and then make your own decision. Steve, why don't you take...
So, Anthony, I have a question on that.
Yes, Steve.
So if I take a loan, how does the lender look at that? Is that added to my monthly loan payments
it's not,
I have
because
to do?
you're paying
It's
yourself back, right? It's not added to your we call the debt ratio. But again, that's still...
So that's important because if you did do a loan, then so let's say you had $100 a month payment back on your loan. We're just making silly examples here, but that $100 a month you're paying would not count against your ability to buy that house or loan.
It would not.
So yeah, that's surprising. Okay,
again,
so that's good to know.
That's the first one. The second, we'll talk about the IRA, Steve, and that's another, and again, consult with your financial advisor or your tax planner. But an IRA, wow, is another alternative. Go ahead, Steve.
Are we talking about a 401k IRA?
No, just an IRA. Okay, an IRA is a separate individual retirement account. And what that is, there are certain IRAs where, depending how long the money's in there sometimes, where you can actually take a certain amount of money out tax-free to buy a home. So, and you may, if you have an IRA, again, consult with your financial advisor or your tax planner and see if there is an option to, take a distribution and use that money to help you purchase the home. And again, you're going to avoid the penalty and the taxable income situation. And again, this is another option to help people make a decision and hopefully do what's best for them.
Right. And I think that the thing that I learned in this situation, from people that I've talked to, is don't do this on the fly. I mean, think this through. If you're in the market for buying a house, maybe contact a bank or somebody that you're going to be dealing with and see what kind of money up front you're going to need. Mm-hmm. I mean, maybe you could talk about this, but don't do this quickly. This is your retirement money. This is your savings money. It's tax deferred. Be very careful before you go touching this money because, there's no going back. Once you take it and you're taxed on it, I've got friends in this position. There's no going back. Once you take it, you've eaten it, and it's done. So don't take this lightly. Plan out, talk to a financial advisor, make a smart decision here on your money, and be in a position when you're looking for a house where you've already done this. Don't wait until you found the house and then you got to come up with all the money and then you're just going to take it out of your 401k. Think this through before you get to the point where you're looking for a home and you need to find financing. It's kind of like what I do, Anthony, when I go to buy a car. I kind of get my financing set up before I go looking, so I don't have to sit there and try to figure out, how I'm going to finance it and all that good stuff.
I gotcha. Another option, Steve, and again, mostly for first-time home buyers, some lenders offer some down payment programs. Again, some of them...
Veterans, right? Veterans programs?
The veteran program is a whole separate program. See, that's a 0% down program through the VA, and you have to have the VA entitlement. But down payment programs are sometimes from nonprofits, and they work with the different lenders if you're buying a house in a certain area, depending on your income. But they have some grants available. So when you're shopping around for a loan, before you have to take money out of a 401k, and that it's another option. Sometimes, again, you can find something that'll work for you. And again, should you use the grant? Well, sure. Just get all the information about it, and it's another way of helping you finance a home and coming up with a down payment. And the last option, and one that I'm always a big proponent of, is prepare now for buying that house next year. Set up a savings account or a money market account, and have so much money of your paycheck automatically deposited into that account. When you get your paycheck direct deposited, have an automatic withdrawal come out, have the money transferred into the savings account or your house fund. And that's another great way to save the money yourself. If you can do that, that would be your go-to option no matter what else is available. It puts you a little more in control, and you're going to be better off because it was your funds and you didn't have to go borrow it from your 401k, or you didn't have to take a distribution. And if there isn't any first-time home buyer programs, just prepare. If you're going to buy a house, start saving money 6 months to a year in advance. And if you don't use all of the money, it's nice to have a reserve or an emergency fund from at least 3 to 6 months of your income, because I'm going to tell you what, when you buy a house, you're going to have repairs and upkeep and maintenance, and it sure is nice when you can dig into those that emergency fund if you didn't use it all to buy the house and not have to put it on a credit card. So again, Steve,
Right.
should you use your 401k? Hey, guess what? If that's your only way out and you have to have the house and you have to do the distribution, just think about how much you're going to take, because the less of a distribution you take, the less your tax bill is going to be at the end of the year that you have to pay the following year. And I think
Right.
that go ahead.
No, I was just going to say, think of the pros and cons that we brought up today for your situation, and consult a financial advisor. Again, we're not
Definitely.
giving you financial advice. We're giving you advice that we know from experience on this question. Should you do this? And the final decision is up to you, but make a wise decision. Consider all the facts, the pros and cons, and make a wise decision. And with that, I also want to say, Anth, as we close here, if you've got questions on this topic or mortgage loans, stuff like that, you can email us at anthonym@sierrabub.com. That's anthonym@sierrabub.com. We'll get your questions. If we get a lot of questions, Anth, maybe we'll do another little podcast that answers some questions people have. Anthony has a lot of experience in mortgage loans, and maybe we'll put that together. But we'll definitely get an answer for you and help you out any way we can. How's that sound,
Steve, this is all about helping people and getting the information
That's
out.
right. We want this series to help people.
Right.
And these are big decisions, but hopefully with more information, you make the best decision for yourself and your family.
Exactly. And the good news, Steve, is we'll be back with another Should You series, and
Yes.
we will look forward to that. I want to thank all our listeners, and we appreciate all your support.
We really do.
We do. That's what this is all about. And if you'd like to get updates, and tell you what, you can subscribe to us or follow us. We would definitely appreciate. So thank you, Steve. Any last words before we say goodbye here?
None for me,
Okay.
Anth. I think it was
That's
a
it.
good, quick discussion, and I think hopefully we've provided everybody some good information to consider.
Well, hey, thanks for being with us. Until next time, we'll see you then.
Take
Take
care.
care.